Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your business, your company can benefit from today's current events. And that is a lot of current events going on right now that we're going to chat with you about. But before we get into our intriguing content today, please join me in welcoming our featured guest. Kaaren Hall is with us. Welcome.
Hey, good morning, Ron. How are you?
Glad to have you with us. I'm doing great. Ready for another wonderful day right here. Let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you, and you can reach out to me directly. 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you even if you don't have any needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. And of course, as we do every morning, Ron Siegel Radio, we study the markets, but we celebrate. And today would probably be listed next to National Martini Day. I would say this might be right up there. Now, I am not referring to National One Hit Wonder Day, no. And we're not thinking about Comic Book Day.
I got a bad feeling about this.
Yeah, Tune-Up Day? I don't even know what that means, right?
You know better than that.
Yeah. National Research Administrator Day, Math Storytelling Day, Voter Registration Day. Give them all one big time. Having beaten anorexia, you can probably guess where I'm going. I've been saving the best for last. And we get a drum roll. National Lobster Day. Yeah, that's the one that we'll take. National Lobster. Where are you getting the best lobster around? I was just told, and I haven't been there in a while, obviously, but my favorite place to get lobster, I guess, is out of business now. Francisco's in New York City, Manhattan, was the greatest place to get lobster. You just go in there and tell them what size lobster you want. 2 pound, 3 pound, 10 pound, 12 pound. So I think I'll just have to stick with the Yorba Linda Rotary. That's where I'm getting my best lobster right now. Lobster Fest. Every year, right around, the middle of May, go to Yorba Linda Lobster Fest. Come over there and join us. All the lobster you can eat. Now that's the place to go and get lobster. I mean, I can go there and have 3 pound lobsters, 4 pound lobsters. Enjoy yourself. It's a little messy. But if you get the big whale table, and I'm obviously a big whale, they actually serve it to you there. So it's a fun place to go get lobster. So put that one on your calendar. I think it's May 19th next year. You can look up yllobsterfest.com, yllobsterfest.com. You can tell I like lobster, right? Who would ever remember something as obscure as that? But it is what it is.
It is what it is.
Let's check out the markets for you this morning. Dow Jones Industrial Average up 86 points today. Oil up 72, up a penny, I guess. It's 72.09. So not a whole lot of change there. We did see oil up nicely yesterday. And we're looking at the 10-year Treasury. That one was up at 3.1 this morning. Come back a little bit to 3.06. We've talked about that one. We've talked about where it's going. We've talked about what is happening and what is causing that. And I don't even want to look at what's happening here in Taxifornia because all we see here is a lot of trouble.
Nothing like a little air superiority.
I should mention this one. Kaaren and I were talking about this before we went on air, and I do enjoy chatting about this from time to time. How Money Walks, great website. How Money Walks And I hear people all the time saying, well, you know something, the California economy, 5th largest in the world, it is a great economy. And I say, if it's such a great economy, why are the people who make money leaving? To the tune of $58.63 billion a year net outbound. Ow! Yeah. So where is the money going to? Going to Nevada, $14.06 billion a year. Arizona, $9.61 billion per year. Texas, $9.32 billion a year. Oregon, $8.33. And Washington, $7.32. Now, you look at the list of where people are coming to California from, and you realize that, they're used to being taxed a lot. New York sends us $6.13 billion. Get a little better weather, and obviously California might have just a little bit less in the way of taxes, especially if you're living in Manhattan. Illinois, something you don't have to worry about getting shot every weekend, but they're sending us $4.5 billion a year. New Jersey, $3.24, Massachusetts, $2.48, and Michigan. Now this is fascinating. Now, if you remember what I said, money leaving California, number 5 was at over $7 billion. Number 5 coming into the state is Michigan at 1.47. So think about that concept, and then you understand why from 1992 to 2016, on average, $58.63 billion in annual adjusted gross income is leaving the state. And while I've been talking about this concept here this morning, $22,912 has left the state. That's just the way the numbers work. That's enough, guys. That's enough, guys. They'll keep bringing that cash register as long as I let them, so we have to shut them down every once in a while. What else is going on in the news today? Let's take a look about the markets, because we have been talking quite a bit about the markets. What is driving the markets? What did we see? And I'll give you the reports based on... I just lost my report, my notes, so I'm going to have to go grab those. Once again, there they are. Driving the world right now, and our economy at least, is tariffs. They're back on the front and center. Stocks closed a little bit lower yesterday, being sharply higher last week. Trade took center stage. The latest round of tariffs kicked in on China. I think I heard the president walking in, and he might have been even talking about that.
We owe China.
Really? Well, maybe we're not going to owe China as much anymore.
To somebody from China.
See that? They're selling stuff to China too. So a report over the weekend that China canceled trade negotiations that were scheduled for this week only exacerbated the tension surrounding trade between the two largest economies of the world. Who do you think is going to win that battle? I'm just suggesting. Now, in any kind of a war, nobody really wins. But if we're putting tariffs on $200 billion out of China, and they're sending us far more than we send them, I'm just going to submit this concept here. No one listens to our broadcast. We have 7 listeners. But here's the issue, is that what if we take some of that tariff money and create a new SBA loan for our fellow citizens out in the Midwest? I heard a story this morning about China not wanting to buy U.S. soybeans. So the soybean market is dropping. Well, let's use some of that money that's coming from China, right, and put it towards some of those soybean farmers and just add a little bit more, goodies to these talks so China realizes they're not going to win this battle. So the markets have been shrugging off these trade tensions between the two countries for months. I expect that is going to continue, other than days like last week where we didn't even think about it, because as I've mentioned before, analysts are not expecting the tariffs to have much of an impact on our earnings or GDP. Why do you think we do things like this if you've got strong leadership at a time when our economy is very, very strong? Things could change. I did notice this morning that the president made a comment with Trudeau from Canada. I don't have time to meet with you at the United Nations. There's a lot more stuff on my plate that's more important than meeting with Canada. Of course, after the way Trudeau treated the president when he was in Canada recently, does that surprise anybody at all? Not if you've been watching our president.
Surprise, surprise, surprise.
Obviously, that's not a lot of surprises right there. So what else is going on? I did notice, obviously, consumer sentiment a blowout number this morning. A lot of people are very excited with where the markets are heading, so that's another one of those positives. You don't hear that on the Lame Street media. They're busy talking about what somebody did in high school 40 years ago. Now, or 35 years ago, and I don't know about you. I'm just going to throw this out there. Caprice, you better not answer this one because it'll get both of us in trouble. So here's the issue. Would you be happy if things that you did in high school 35, 40, 45 years ago were spotlighted now? Now, I don't know about you, but there's some things that I would just say, I don't think I'd want those things publicized. Many of us did some fairly foolish things in high school, or at least things that we probably would not do once we had a half a brain. But that's just the way of the world now, so we're going to chat about that one. We'd like to cover that in depth in the news. Unbelievable. We're going to get into a lot of other issues. I thought there was something else I wanted to really get in here for you, because this was another fascinating story, but you might have to save it for later in the week, just because there it was, Tiger Woods. Anybody watch the golf tournament over the weekend? Tiger Woods coming back. How about this one? It was his first win in 5 years. And if you noticed the ratings for the program, highest ever for a FedEx tournament. Tells you where, I think maybe they just don't like to hear all the politics all the time, so they're ready for some of these different issues when they're dealing with some of the stuff in the sporting world. Just a thought. You might have a different opinion than me. If you do, share it. Put it right there. Social media. Dusty, yeah, I would say you're right. It is a bit of a welfare item, but hey, you got to take care of your own people, your own country, when you've got some of these different battles going on. And it is if they call it a trade war, don't you think you should be taking care of your own people? So yeah, it is welfare, but it is for the good of other people. That's just my opinion. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Self-directed IRAs. We're going to talk about that today. We might see if we might be able to catch a good story or two from Kaaren Hall. Where are mortgage interest rates headed in 2019? What do you do next if you've frozen your credit? Did you know you can freeze your credit? And is a fixer-upper home worth the investment? All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1. Ron Siegel, the numeral 1, on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams, or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018 lets you borrow up to 100.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Mortgage Minute today, being brought to you by our friends over at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star is the only one I know of that has the Fast Pass loan approval. Fast Pass loan approval, saving you $10,000 to $50,000 potentially on the purchase of your new home. No pre-approval, no pre-qualification. It's completely pre-underwritten, and that helps you. That's the idea. That's why they do it. Give me a call at 800-306-1990. I will put you in touch with the right folks there to help you get that done. The Mortgage Minute. What is happening in the markets? Well, Dow Jones up 42. The 10-year treasuries, they're up 2 basis points right now. Not a whole heck of a lot. Not really meaningful. So when we look at those things, then the real question becomes, and I share this with you all the time, not the what, because you can go to that super secret website and find out what is happening. It's simply by going to google.com. They'll give you that information. It's the why is it happening? Well, why are the mortgage rates going up? Well, the 30-year Fannie Mae bond, that's down 6 basis points this morning. Still hovering right around that level of support, so we got a lot more upside potential on the bond, which means interest rates would go down than we're seeing on the other way around right now. But the mortgage bond slightly lower, 10-year near a little over a 7-year high. ECB President Draghi said that there was a relatively vigorous pace of underlying inflation in the Eurozone, which weighed on the bond market. The ECB chief economist Peter Pryat tried to walk back Draghi's comments today by saying they were nothing new. Really interesting. Our Fed's going to start their 2-day meeting today with their statement due for release tomorrow about 11 o'clock our time. The market is roughly 100% expecting a 0.25% rate hike. Now, if you can get everybody in the marketplace to agree on anything, boy, that's pretty unique, pretty rare. So I would just count on that going up. Count on your home equity line of credit and any of your other adjustable instruments going up. Case-Shiller Home Price Index tracks the changes in values of real estate across the country, showed that home price appreciation decelerated slightly. Now remember that I did not say it went down. It didn't go up as much as it was going up before. The national index covers all 9 U.S. Census divisions, reported a 6% annual gain. That is a lot of gain, 6% annually, but it was down from 6.2 in June. So think about that. In Orange County, we averaged 5.1% over the last 43 years. So we're still going up more than the norm. Think about that, because I already heard one of the channels this morning talking about real estate is dying now, and we're going back into a buyer's market now, and prices on properties are being. Here it was Redfin that came out with this report saying that they're getting more price reductions than they've seen in a long time. Well, if people are overpricing their properties, does that not mean that they're going to still get price reductions? They didn't talk about the idea that we're still going up 6% rate of return now. In most instances, and we've got Kaaren Hall here, we're going to talk about self-directed IRAs. This does not hold true for the self-directed IRA in most instances.
It doesn't.
I'm going to share this part with you.
Okay.
Got to get the whole thing in there.
Let's hear it.
So if you are leveraging a property, if you're buying your home with 10% down, then you get to say, okay, it's not really a 6% appreciation, but your return on capital is 60%. Now, in most instances in the self-directed IRA, and tell me if I'm wrong, Kaaren, you're buying your properties for cash.
Most of the time.
So if you buy a $100,000 house and you put 10% down and it goes up 6%, 10% of that is $6,000 appreciation on a $10,000 cash investment. That's a pretty good investment, return on investment, 60%. But if you do that same property within a self-directed IRA, if I understand it correctly, most instances you're going to be putting $100,000 into it, so you're going to get a 6% rate of return. Great rate of return for a tangible asset that you can go and see and touch and smell, and hopefully it doesn't smell. But it's more secure. It's not guaranteed, but it's not going to be the same 60%. So just think about that concept. They're not telling you that in the mainstream media. Just a thought for you, and I'm going to get into the numbers on the FHFA side of it in just a minute, because that's a different price index, but I like that one better than the CoreLogic index, and that's showing it up 6.4% year over year. I'll explain to you why. That's the Mortgage Minute, again, brought to you by Gold Star Mortgage, the only one I know of with the Fast Pass loan approval. So let's talk about self-directed IRAs. Did I go wrong on the concept there of the return on your capital?
I mean, no. I see your logic, but you can also, for example, like your IRA and somebody else's IRA can partner together, and if you do that, then maybe you're just putting X amount of cash. And you know what I mean? It just depends on, you're talking about a percentage of, you put in so much cash, how much do you get returned? But the other thing is how much money, if you take 100% of that money and put it in the stock market, what's your rate of return there?
Oh, absolutely. You're much better off.
And that's why self-directed IRAs give you a choice. So where are you going to put that retirement money? You can put it in the stock market, or you can put it in alternative assets like real estate. So which one are you going to choose? And
so here's another thing, and I'm not going to give you financial advice because I gave up my license. I had a license for it, and I'd rather be honest with you than go with all these licensing things. So here's the concept. The stock market, the Dow Jones, as measured by the Dow Jones Industrial Average, 26,601. It's not at an all-time high, but it's very close. Now think about this. Now, anytime you've got a asset or a market that's at or near all-time highs, don't you think there's a likelihood of a correction? Don't you think there's more likelihood that it's going to go up? It's going to go up over the long term, but I'm saying that watch for a pullback on the Dow. Now on real estate, we're really not at all-time highs when we adjust for inflation, even from before the bubble.
Right.
Right? So we're still at a great time to be buying real estate. And the other thing is if you've got a 401k, a traditional 401k, it's almost always invested exclusively in either the stock market or the bond market.
Correct. Mutual funds.
Mutual funds, which is stock, right?
Right, yeah.
But if you go with a self-directed IRA, at least with a portion, you're diversifying your portfolio.
Absolutely, right. And you can also invest in private stock companies that are raising capital, like either in a debt or equity position. Yeah, you can do that too.
And there's a lot of different things going on out there. We're doing a lot of odd things right now in our production company. So you always look at these, where opportunity, right? An opportunity when you're looking at the stock market being at all-time highs versus the rest of the world, right? In the self-directed IRA, you don't have everything in the world available to you, but a lot bigger portion.
Yeah, well, when the IRS came out with self-directed IRAs, they said that your IRA, well, when they came out with IRAs, just period IRAs, that your IRA could invest in anything except life insurance contracts and collectibles. Okay, that's what they said. So that pretty much leaves it pretty wide open. But
sure.
Then the brokerage companies.
When you say contracts, what's that mean, Kaaren?
Life insurance contracts.
Just life insurance contract.
Life insurance.
Okay, I thought you had a comma in there. I was just
life insurance. No, it's life insurance, like the contract.
So life insurance contracts.
Correct. Yeah.
Okay.
So no life insurance in an IRA, no collectibles like a fine wine collection, but everything else is okay with the IRS. It's whether or not. Then you go and talk to custodians, and what are they willing to custody? What is a business decision? What will they custody?
What does that mean?
Well, say for example, your IRA could invest in like a herd of racehorses or whatever, or a herd of cattle or racehorses. That's something your IRA can invest in. It's an investment, but whether or not you've got to find a custodian that will take that asset. So
basically, the custodians. It's kind of like we say in the lending world that Fannie Mae and Ginnie Mae and Freddie Mac all have their guidelines, and then lenders will put overlays on that. So basically what you're saying is the law is ABC, and that's clear cut.
Right.
But a custodian can say, well, I don't have the capacity for storing racehorses in my office.
Right, exactly. Yeah, they're a little smelly. So
exactly. So that's where the difference is. So you just have to find the right custodian
for your asset
class.
But if it's real estate is about 95% of what we do, because almost all these assets are tied to real estate. If your IRA, for example, is going to be the bank and make a note, that's going to be a note on real estate most of the time. If your IRA is going to invest in private stock, like a syndication, well, that syndication is likely buying a commercial piece of real estate, and your IRA owns a portion of it. So a lot of the assets are tied to real estate.
And the beauty of that is, it's just like I'm assuming like in a traditional 401k or IRA, the profits are deferred until distributed.
Correct. Exactly right. Yeah.
So I don't have to send Uncle Sam. They're not going to be a partner with me right away.
Not until you're 70 and a half and you have to take them out.
Right. Yeah. Unless you find some other avenue to get some write-offs. Right. I mean, outside the IRA, and then you offset them. Right. And the reason I share that is I'm going through that right now, and I've told you before, as we've talked on radio, as I've shared my journey, right? So when my mom passed, she had an IRA, and the IRA, when we distribute it, is a taxable event.
Unless you take it on yourself as an inherited IRA, yeah.
But we also had a reverse mortgage that had deferred interest expense, and you offset the two of them. So it goes back to
gain and
planning.
a loss, you're saying.
A gain and a loss.
Yeah.
So it's just planning. So if you've got the reverse mortgage and you've got a distribution coming out of an IRA or a self-directed IRA, you can make, you have to understand how these things work, and that's why you need to have
you got to have financial team. You got to have a team.
Right?
Got to have a team, yeah.
Because none of us know everything. And as much as any of us try, even in our own specialty, I get people calling me all the time, and I've got to go and talk to my team and say, have you heard of this? And I'm assuming that as much as you deal with people in self-directed IRAs, you get loons like me that call you and have odd questions.
I hope so, because it's going to be challenged,
And that's how we all learn. I mean, that's the idea of it. But it's not a matter of knowing every answer. It's about knowing where to get the answers to make sure and protect you. And we're going to talk when we come back. What is prohibited in the IRA? And, can I go and live in the house that my IRA buys? We're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Where are mortgage interest rates heading? We're going to chat about that one as well. Credit freezes are now for everyone. What you need to know. What is a credit freeze? Probably not as good as Tasty Freeze, but we're going to find out anyway. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel
Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. Real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Nest gets you that information quicker than any source I have seen. Where are mortgage interest rates headed in 2019? Interest rate you pay on your home mortgage has a direct impact on your monthly payment. The higher the rate, the greater the payment will be. That's why it's important to know where rates are headed when deciding to start your home search. I shared a chart earlier today showing Freddie Mac's U.S. economic and housing marketing outlook. As you would see if you looked at that chart, interest rates are projected to increase steadily over the course of the next year. Looking at by this time next year, 5.2% on the Freddie Mac rate. That does not mean that's the rate that you get, because there's about 30 different loan level price adjustments that will determine your rate. This just goes based on the perfect rate. What's a perfect rate? It's a purchase money loan at conforming loan limits, 60% loan to value, 760 FICO score or better, and a single family residence, not a condo. Depending upon the amount of the loan that you secure, a 0.5% increase in interest rates can increase your monthly mortgage payment significantly. According to CoreLogic's latest home price index, national home prices up 6% from this time last year and are predicted to be 5.1% higher next year. If both predictions of home price and interest rate increases become a reality, families would wind up paying considerably more for their homes. Even a small increase in interest rate can impact your family's wealth, so don't wait. It also impacts your purchasing power. So think about that. If your income is not going up as quickly as mortgage rates and real estate, your purchasing power diminishes. So just think about that. Although there are different tricks that great lenders can help you with in increasing your purchasing power as well. It's just a matter of knowing what goes into the numbers and knowing where the opportunities are. Just a thought for you right there as well. And I did mention to you that I wanted to get back to this real quick because I want to get back to our conversation with Kaaren here about self-directed IRAs. But we looked at the FHFA House Price Index up 6.4%. And I tell you all the time that I like the FHFA number better than I like CoreLogic. Now in the Pacific region, up 7.9% year over year. Here's why I like FHFA better. Because it only uses conforming loan limits. So even if it's the high balance limits, that goes into FHFA. They don't take into account the jumbo loans. So CoreLogic is taking into account all the different numbers. FHFA stops at 650, 640, 417, whatever the number is in your specific area. So that's the idea there. That's the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Let's get back to our discussion of self-directed IRAs, and we have the guru with us. Kaaren Hall, UDirect IRA Services, with us. Welcome.
Hey, thanks, Ron.
So we better get back to this because I would hate to leave our broadcast and not have gone into the area that is really important here.
Okay.
About prohibitive. Can I move if I buy a house in my IRA? Can I use it as a second home?
No, you can't. You can't have any personal use. I'm sure you have a little sound effect for that. You can't. Yeah.
Exactly. I've got that one right here. Now, see, that would presume that I knew the answer.
There you go. But, no, don't live in it.
I should know that because you've shared it with me before.
Oh, well, that's true.
Right. Okay. So you can't use it, let's chat about other issues here because one of the, and I've kind of brought this up earlier, and I'm going to throw this at you a little bit. Not that I want to be a Debbie Downer or any sort of thing, but I did go through. I was talking earlier about I'm a big proponent of the reverse mortgage.
Yeah.
And one of the big issues in the reverse mortgage is we see a lot of fraud in it now. The fraud is that Grandma and Grandpa go and get a reverse mortgage. They don't have a house payment. Then they move into a senior community, and they're renting out their home, and that's a big no-no. The reverse mortgage says it's got to be your primary residence. Now let's flip that on the other side of the coin, and the servicers and FHA is going out and starting to check that.
I see.
To see if people are you really living where you say you're living?
Yeah.
So now let's flip this over to the self-directed IRA. I go along circuitous route.
Sure.
Right, and I have this property that I bought out in the desert, and I put it in my self-directed IRA.
So your self-directed IRA bought this property, right? Okay.
Not me. I didn't do it. Thank you for correcting me. Okay. Thank you for getting me back on track. But I'm going to go out there just to go to Coachella. And I want to stay there.
No personal use of your IRA-owned assets. That's a big no-no. So there's so many things you can do. There's some things you can't do, right? And so if I say, hey, Ron, we're going to play a game, you're going to say, well, what are the rules, right?
Sure.
So you can win.
That makes sense.
So if you're going to play the self-directed IRA game and use your retirement money to invest outside the stock market, there are some rules, and you have to keep away from these prohibited transactions. So it's like a game of keep away.
Okay.
Right? All right.
So part of that, I guess, then would mean to me that you got to be involved with, especially as your parents get older and older, your grandparents get older and older.
Yeah.
Have the family conversations with them.
Oh, yes.
Right? Because I'd hate to see, I know that Granny has a house out in Palm Desert, and I'm the grandson, and I'm just going to recommend, hey, Granny, let's move you there. And not knowing that it's in a self-directed IRA can really cause a problem.
It could, because there are certain people that are disallowed to your IRA, and they're your ascendants and descendants, right? So your IRA doesn't do business with your parents and grandparents and their spouses, with you or your spouse, or your children and your grandchildren and their spouses. So those people, your IRA just doesn't do business with.
What about sisters and brothers?
Yeah, they're okay. Yeah, nieces and nephews, cousins, aunts and uncles, they're fine, but just not up and down the family tree.
Ah, okay. So I could rent out a property to my sister. Or,
yes.
And that's allowable.
Yes.
Actually, I should say that. I'm going to correct myself here.
No,
the IRA could rent out the property to my sister.
Oh, there you go. Better. Yeah.
Right? I can't do that because the money then has to go back to
the IRA.
Because they're the owner.
That's right. And so 100% of the proceeds have to come back to the IRA, and 100% of the expenses have to be paid for by the IRA too. So it would be a prohibited transaction, for example, to pay for your own roof repair on a self-directed IRA home. You can't do that.
So who does all the accounting for that? Like when you're talking about if I have a roof repair done,
yes,
I contracted out with a roofer to go and do the work on the property that I'm self-directing. Do I have to keep a separate set of books for the IRA?
You probably should, but we do the record keeping on the IRA itself.
Okay.
Yeah, but it's a good idea to it's self-directed, so you're responsible for what happens in that IRA. We'll do the record keeping, but you also have to make sure that.
So you're going to do the disbursement.
Yeah, yes,
you're going to pay that bill.
Correct.
Okay, so that way, just the only reason I'm asking that is obviously I can maintain that and I can see it, but I would assume that when the IRS gets to the point of if they ever want to audit it,
yes,
having two sets of books that are matching.
Well, yeah, you don't have to go that deep. You don't have to go that deep. Just with the self-directed IRA, we're going to do the record keeping, but you just want to make sure, too, you know what's going on because you're responsible. But when you've got real estate, what you can do is you can select the property, you can screen the tenants, you can pick up and collect the rent checks that are made payable to the IRA and send them into the IRA, and you can also hire third-party vendors to do the work. So you can kind of property manage your IRA-owned properties if your IRA does buy a house, but what you can't do is do the work yourself, because it's called an over-contribution of sweat equity. How do you like that?
Ooh.
So you can't do that. Don't do the work yourself, but you can keep it arm's length. Hire third-party vendors to do the work.
Interesting. So part of that, I guess, it would sound like you might want to just make sure you have a good property manager.
Oh, yeah. If your IRA owns real estate, having a good property manager, they're your best friend. Say, for example, Ron, your IRA and my IRA bought a house, and now we've got a tenant moving in there. Well, technically, that tenant would have to write one check to your IRA and one check to my IRA for our pro rata share of the rent. Technically,
that would be a pain in the neck.
Yeah, it's hard enough to get them to write one check, right? So they write the check to the property management company. The property management company disperses the money where it needs to go. The check is made payable to the property management company. That's great. The tenant doesn't need to know our IRAs own the property. And also the property manager can hold back a little money for repairs so that they don't have to, so that if something happens in the middle of the night, they've got some money to go fix it.
Oh, nice. Okay. So yeah, because that always happens, and that way they
always
don't have
happens,
to.
Yeah.
It's like smoke detectors. They never go out. The battery never goes out during the day.
It's 3 a.m. Why
right?
is that?
It's the only way they ever work. We're going to get back and chat more about the self-directed IRA. We've been pushing these and promoting these and chatting about these in our Lunch and Learns with the professional real estate community. Now we've got the guru here telling us how to administer, and we don't know how that part. That's not our world. You just have to know the right people to help you. So we're going to continue that conversation. When we come back, we'll also talk about credit freezes are now free for everybody. What you need to know. All that and more. You can reach me anytime. Off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams, or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area-trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com. Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800- Change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRENMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solutions. I can fairly confidently say your credit report is wrong just because I would go back and say, I've been looking at credit reports for way too many decades to mention, and I've yet to see one that's completely accurate. Never. I mean, I even work on my own credit report, and even that it's nearly impossible to get them completely accurate. The bureaus just don't want it that way, because the lower your credit score is, even if you got a great credit score, the lower it is, the more money they can sell those reports for. So what are we going to talk about today in this segment? How about it is official? All Americans can freeze their credit for free. Changes were slated earlier this year to go into effect on Friday, September 21st. They're live on the sites of the three major credit bureaus, Equifax, TransUnion, and Experian. Go on there and check it out. It's been more than a year since the Equifax data breach, in which the company disclosed that criminals had stolen the personal information of nearly 150 million Americans in a massive hack of their computer system. Social security numbers, names, addresses, credit card digits were all part of that hacking. And then when they went and tried to correct it, they got them again. So even though they were trying to correct the problem, they ended up getting another batch of people getting their information. A year later, Congress made sure that Americans have a no-cost way to put safeguards in place to deflect attacks on their personal info. I don't know if it's going to ever work. Here are the new changes, though. Unfreeze your credit for free. In addition to freezing your credit without charge, you can unfreeze or thaw your credit for free as well. Free child credit freezes, previously depended on what state you were in, but now parents and guardians can get a free credit freeze for children under age 16. Free fraud alerts. Initial fraud alerts will last for 1 year, which improves on the previous time period of just 90 days. Identity theft victims can get extended fraud alerts for 7 years. Take this important step, though, before you freeze your credit. The number one security issue online these days is identity theft. That's why I say the one thing you need to do before you freeze your credit is to put in place a way for you to monitor your credit. So remember, Credit Karma, joke. Credit Sesame, not funny. Those are FICO scores. Those are not FICO scores. You want either myfico.com, which is, I think, the only one that'll actually give you a mortgage credit score. They'll give you the mortgage credit score, the auto credit score, the bank card credit score. They are all different scores, and none of them are going to be the same as the Credit Karma score, which is a FICO score. It is a credit score, not a FICO score. So you know what that's good for? Absolutely nothing. But it's free, and you got just what you paid for. So just be careful of that one. I use it just so I see when something's popped up on my credit report, and then you can go on and look at another source to get real information. But that's the idea there. That is the Your Credit Matters segment, brought to you by CreditSanitizer.com. You've got a credit report, it's wrong. Go to Credit Sanitizer, get signed up, and let's get your credit report accurate to save you money. We are chatting this morning. Kaaren Hall is in. We're talking about self-directed IRAs, the do's and the don'ts. Hit some prohibited items in there, Kaaren. So
yeah, a couple of them.
It's not a whole lot, and you wonder certain things. I just trying to think about the whys of things. Mm-hmm. If you had a rare book collection or art collection,
it's just not an investment. Yeah,
but those things grow. They get they grow pretty big. The values, if it's some significant ones, you just wonder. I mean, maybe it's because you're getting the personal use of it too. Where are you going to put that?
Well, you probably are. That's true. I don't really know the rationale behind that, because it's like diamonds are collectibles, where gold is could be in an IRA. So
a diamond is a collectible.
Yes.
Interesting.
Yeah. So it's the IRS has just made some guidelines, and that's what they are.
As long as we know the rules, right?
I think also like wine is a collectible, but I think too many wine collections turned into bottle collections, right?
Yeah, exactly. My wine collections all seem to be empty bottles.
So you can't do that. So
that one makes sense.
Yeah.
I mean, I can understand that one. So give me, there's always the fun things that we talk about in every scenario, right?
Right.
I've had estate planning attorneys come in and we chat and they give us some of their story time.
Okay, story time.
And we've had some divorce attorneys and credit repair and all these. Just give anything that comes to mind, a real win where somebody, just was really, something turned out really, really great for somebody because they made this decision. Do you ever come across something or is it just really a vanilla lending issue?
No, it's not lending. Understand?
Or investing.
Yeah, I know. And having been a lender myself, I make that.
Right.
I call them borrowers instead of account holders. That sort of thing. So I make that too. But so we've got this one woman. When we very first started, opened an account, she bought a piece of real estate, and so she bought this real estate, and she would always pay the bills from the IRA, just perfect, handling it perfectly, and all the money came back in the IRA. Well, God bless her, she passed away, and all of a sudden here her son is coming in, and now he has inherited this IRA, so he's inherited this property. So it was a little adjustment to learn, well, what's a self-directed IRA? How do I do this? But the thing of it is that watching over like 9 years that she's had this asset, or this asset is now passed to her son, looking at the value just go up and up and up, and see how he's got, even though he's paying the bills of the IRA, so there's profit and there's expense, but the net is really making him some money. So that's very gratifying to see.
Now, do all the rules, are they basically the same in that situation where the initial IRA holder passes.
Yes.
And then it goes through the estate process.
No, it does not go through the estate process.
Oh,
it just like if I were to pass away, my IRAs would go to my beneficiaries directly, without going through the estate. But they would just go directly to the beneficiaries, and my beneficiaries would receive an inherited IRA like that.
Now we want to make sure that we tell you this right off, because
talk to your tax people, talk to your lawyer,
and your lawyer, because some of the things I dealt with, again, in my situation, my mom's IRA, it was actually a rollover IRA that was titled incorrectly.
Oh, no.
Right? So then we have to start figuring out, how do we deal with that, being that the titling was to the trust and not to the beneficiaries, like you just suggested.
Always going to make sure you check your beneficiaries. Make sure you check and talk to if you've got a trust, talk to your trust attorney and say, hey, should I make the trust the beneficiary of my IRA or not? What do they say? What do they think about it? Some people say it's great. Some people say it's not great. So you want to get a legal opinion.
Right. And that's where you want to bring your household board of directors in.
Absolutely.
Right. So you're going to bring in your IRA custodian. You're going to bring in your CPA and your attorney and your financial planners.
Yeah.
And, basically, if you get conflicting advice, then it gives you more questions to go back to each of them and say, okay, well, John told me this and Kaaren told me that. Now what do I do? Ask them both.
Yeah.
Right?
Yes.
That way, or put them on the phone with each other.
Get a conference call going on. Yeah,
right?
that's a good idea.
We've all got cell phones nowadays that have conference calling features.
Sure.
Right? It's not that difficult to get that advice together.
Right.
Right? I mean, it's a whole new world, and we mentioned this earlier, Kaaren, and we don't talk about this enough. And that is the concept of diversification.
Yeah.
Right? And we're able to diversify out of just stocks and bonds and mutual funds.
Right.
By using your tool.
That's right, the self-directed IRA, to, again, invest in things like, it could be precious metals. It could be, like I said, companies. Maybe you've got a friend that's starting a company. Well, you can either become a shareholder of that company in an equity position, or your IRA could lend money to that business owner to start their business and have a debt position in that company. Your IRA can buy trust deeds. Your IRA can buy performing and non-performing debt. I mean, those are assets too. Your IRA can buy houses and apartment buildings and raw land and commercial, all different kinds of things. So you've got choices. You do have choices. So, if you have some money in the stock market, that's great. I mean, things that go up tend to come down, in my experience.
Sure.
I don't know about yours.
Absolutely.
That's what I see. So, I mean, if things are at the top, maybe it's time to look for something else.
And diversification is always good. You don't want to put even if in the stock market, you don't want to have it all in one stock.
Right.
Right? Basic information. But the only thing that you do want to do, always, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A very big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your time with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990. I'd be happy to put you in touch with Kaaren Hall, the self-directed IRA guru, coming in here to share with us on a regular basis. And again, if you have any questions, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.